Hi guys, welcome to this evening's session. Lovely to see some of you online again. And I hope you guys have been working hard towards your second assignment. So as you can see from the screen, let me just get this up. Your second assignment over here covers learning units 1 to 4. So that's the ones that we're going to, those are the learning units you should be working on at the moment. So you guys have had a fairly nice length of time to work on your second assignment. Most of my other modules have already handed their second assignment in. So, and you've only got the 4 learning units. So this really gives you a nice bit of time to work on them. Okay, so I'm just watching the screen just to check that no one else is still joining. But hopefully everybody is here. Okay, so anybody that joins later, this is recorded, and I'll give you the link to the recording tomorrow, so you'll be able to hear what we chatted about if you missed this evening's session. Okay, so I want to start off first just by finding out from anybody has got any questions that they want to ask before. Because remember, these sessions are really for you guys to have access to a tutor in a one-on-one live situation, so that if you've got any questions or anything that's bothering you, anything at all to do with the module, then this is your opportunity to ask. And then if I can't help you right away this evening, I'll make a note and make sure that I can either get back to you or provide you with the information in the days following the session, the collab session. Anybody got anything specific that they want to be covered or want some information on? Anything else? So also just remember that this evening is just a general collab, just to see if anybody does have any questions, anything that anybody needs any particular support with. And we will be having the official national support session for your second assignment. That's next week, Wednesday. So I'll just put that in the chat. The NSS is next Wednesday, which is going to be the 31st of May. And that will be at 6 p.m. Let me just double check that. The NSSs are usually at 6. Where am I? Yes, that will be at 6 o'clock. Okay, so you guys know what happens in the support sessions for the assignment specifically. I go over the question paper, I go over some hints and tips, question by question for you guys, and that will be next week's session. Okay, and then also just to remind you guys, your assignment to due date, just so that you have got that in mind, is the 7th of June. And that's also going to be Wednesday, so that will be the Wednesday following NSS. The next week, Wednesday, will be the NSS for assignment 2, and the Wednesday after that, the assignment 2 is due. So you guys have basically got, if we count from today, you've basically got 2 full weeks to go before your assignment is due to be handed in. So you should definitely be working on the assignment now already. I would definitely hope that you are. Okay, so if no one's got anything specific that they want, that they're asking at the moment, what I thought I would do this evening, if you remember last collab that we had a look at question 4.8 in your textbooks. And I went over the cash book receipts part of that question, going through each column in the cash book receipt so that you guys understood exactly what was required in each column, how the calculations in each of those columns worked, etc. So I wanted to just take a look at that question 4.8 again this evening, because it's a really good question for you guys to practice everything that you need to have mastered in order to do your second assignment. And then remember, after this as well, we've only got 2 more learning units after this, which will be then for your exams, learning units 5 and 6. So if you really master these first 4 learning units, that really is going to form the bulk of your exam as well. So really make sure that you guys are going through every page in your textbooks. Your textbooks are so important. I can't emphasize that enough. Every bit of information in your textbooks is important, and you shouldn't leave anything out, and you should try and work through it from the beginning all the way sequentially through the textbooks, because particularly with this introduction to accounting, if you miss out some important information near the beginning or in one of the learning units, then you're going to be lost in when it comes further down the line, because everything in accounting builds on the information that you were taught in the previous learning unit. Okay. So this is really particularly your learning unit 2, accounting equation and double entry system. Really just keep going back to that learning unit and make sure you understand and you've memorized the rules for debits and credits, the dead click. You know exactly what to do. You know what a T account is, and you can do that analysis under the accounting equation, and you can get those questions right. And then when you've mastered that, then move on to your learning unit 3. So your learning unit 3 is very important because it contains all of those calculations, your VAT calculations, markup calculations, gross profit calculations, and calculating the cost of sales if you are given selling price or markup, etc., how you can do those calculations. And of course, all of your VAT rules are also in learning unit 3. And you need to have also memorized the VAT rules and the VAT categories from learning unit 3, because without knowing those, you can't go on and do the recording of actual transactions in journals like we then do in LU4 cash transactions and LU5 credit and sundry transactions. Okay, so that really is, and if you keep going back over and over those questions and examples until they become familiar to you and you can really do those questions and examples, you can start getting them right without having to look at solutions. Because remember, when it comes to the exams, you will not have anything in front of you, only the question paper and your blank paper, and you're going to have to work from there. So you must practice in that same manner. So luckily, while you guys are practicing and getting used to everything, you've got your workbooks that came with your textbook with the templates for each of the questions, and you can use those to complete the textbook questions and practice. Okay, so then I am going to go now, and I'm going to share my screen with you so that I can put up the answers to question 4.8 on the screen, and then I can just discuss some more the other parts of that question and some of the other cash journals in that question as well. Let me just quickly find this, share screen, entire screen, audio. Okay, so in a few seconds, you should see the little kaleidoscope appearing on your screen, all right? And then I'm going to go to the answer book. So guys, what you're looking at here on the screen that you can see now, this is exactly what is in the solutions at the back of your textbooks for this question 4.8. Okay, so hopefully you can see the cursor on the screen. Question 4.8. This is yeah, it says activity 8, but it comes from question 4.8 in your textbooks. So this is exactly what you will find at the back of your textbooks in the solutions section. And again, please make sure that included in the solutions in this textbook, they often put in commentary or notes or other information to explain what they've done or how certain things work. So it is also extremely important that you guys work through the solutions in your textbook given to you, and you thoroughly understand and you look at all of the workings that they've given you and all of the notes, because that is also going to help you to understand how you should go about doing various calculations, etc. Okay, so just have a quick look again at the screen that we've got here, because if you go and look at question 4.8 in your textbooks, this was where they gave us a company, Fresken Traders, and they buy and sell. And at this point of the game, they buy and sell on a cash basis only. But they are a VAT vendor, and they also buy from VAT vendors as well. So the reason that they give you that information in the question is to tell you that you must assume that all transactions include VAT, excepting, of course, where VAT does not apply only because of the VAT category of that transaction. In other words, it is either a zero-rated, a VAT exempt, or a non-allowable type of supply. And by non-allowable, we mean that the company you bought the goods from did add VAT onto the transaction, but we as a company are not allowed to claim the VAT because it is a non-allowable type of supply, meaning it's something like entertainment, an entertainment type of expense that we're not allowed to claim the VAT back on. So the VAT remains part of the actual cost of that, of those goods. And we'll have a look at that in a second when we go and have a look at the cash book payment side. Okay, so if you just remember, and if you weren't on the last collab, this page that you see in front of you, there was a full discussion of exactly how all these calculations worked and what all these different columns in the cash book receipts were and how we use them. So the reason that I spent a whole session on the cash book receipts is because it is, I think, a little bit trickier than the others, because it's got this analysis of receipts column in it that does confuse students. But once you've mastered this document day details folio, that appears in all of your other subsidiary journals. Only the cash book receipts has got this analysis of receipts column in it, and then all of your subsidiary journals are then followed by what we call the main column of that subsidiary journal. So the very first column is then the main column. So you can see here in cash book receipts, the main column is bank, because we are going to debit bank, and all of these other columns will be credited. So that forms our journal entry: debit bank, credit, output VAT, and sales, or debit bank, credit, output VAT. No, none of these are. A debit bank, credit, capital, debit bank, credit, loan, debit bank, credit, interest. Okay. We are actually creating a journal entry by using these subsidiary journals, as we call them. And remember, the reason that we have a subsidiary journal is to collect similar types of transaction all in one place, on one page, in date order through the month. So for each month, we do this. So these are all examples of transactions where the business received cash, either directly into their bank account, like here in the case of the loan, where the bank paid the loan directly into our bank, or that they gave the cash to the business received the money into their till, and at a later stage they banked the money. So in our general ledger, which is our T account, instead of entering every single one of these transactions into the T account in the general ledger, which would make that T account extremely complicated to understand and to look at and to see what's going on, we first enter the transactions into these books of first entry, as we call them. And then we total up the columns. and these column totals only are then posted into the general ledger. Okay, the general ledger meaning the T accounts or the collection. The general ledger is the ledger which is the collection of all of the accounts that we have in our trial balance, showing exactly what took place in each of those accounts. Okay, so capital, loan, interest, bank, output VAT, sales, those are examples of accounts that appear in our general ledger. So these column totals, instead of entering all these individual transactions into the bank account in the general ledger, we enter it here into the cash book first, and then only this column total, the 157,117.50, will appear in the T account bank on the debit side of the account. And in the detail side, we will then state that this is the amount that has been posted from the cash book receipts. So in the folio, in the general ledger, we will have cash book receipts, and in the details, we will say total receipts for the month of May and the amount. Okay. So again, go back to last collab if you want to revise all of these calculations. I revised these calculations with you. So again, only in the cash book receipts do we have this cost of sales column, because we only need to calculate the cost of a sale when we have made a sale. And when we make a sale, we then record a receipt of cash. So remember also that for each sales transaction we make, if we are using the perpetual inventory system, there will always be 2 journal entries that need to be recorded. The first one is to record the actual sale itself. So here in the analysis of receipts column, we've got the actual rand amount that our customer paid us for the sale, and which is then split between the output VAT, which we are going to pay to the receiver of revenue, and the amount that goes into the sales column, which is the amount that belongs to us, the company. And then the second journal entry is we have to also record what is the rand value of the inventory that we sold, the cost of the inventory, because we now need to take that amount out of our trading inventory account and debit it to the expense account called cost of sales. So you'll see there's a gap between this part of the cash book receipts, which is the main cash book receipts, and this separate column on the right-hand side here, which is only debit cost of sales and credit inventory. So that total amount, 28,292.08, is the amount that at the end of the month of May, we will debit cost of sales expense account and credit trading inventory, showing that that's the amount of inventory we no longer have in our trading inventory account anymore, because the customers went home with that inventory, and it therefore goes out of inventory and becomes an expense. So that the difference between the amount that went into our sales account and the amount that went into the cost of sales account, so 36608 minus 28292, that is then the gross profit that we made on these sales in the month of May. Okay, because not total amount of sales is not a profit, because we have to pay for the inventory first, and only the difference between what the inventory cost us and what we sold the goods for is our gross profit. So always 2 journal entries when we make a sale and we are using the perpetual inventory system. Okay, any questions on this section? Anybody got any questions? Nothing specific yet. Okay. All right, so then let's go back and we'll have a look at the cash book payments. So same question, question 4.8. Oopsie, got that there. Question 4.8, for anybody that comes in later, you can see what it is that we're doing. And here again, instead of document day details folio, for the cash book payments, we've got document day, name of payee, and folio. So in the cash book receipts, what we write in the details column is the name of the person or the source from whom we received that money. Okay? Who paid us that money? That's what goes in details. When it comes to cash book payments, we call that column name of payee, and that's exactly what we write here. Who did we pay the money to? Okay, so if it is just cash that we are paying out, and we use, in this case, it was cash that we drew because we were going to put that into our petty cash box, then we just use the word cash. But all these other, what goes in here is who did we pay the money to? Okay, not the name of the general ledger account, but who did the money get paid to? Okay. Lucia's Utensils, Lordum Dealers, Metro Council, etc. We don't use the folio column when this is when these are all when we are dealing in cash transactions only. In Learn Unit 5, once we start using credit transactions, then we'll use this folio column in the cash book payments and in the cash book receipts, because we will then, if we are receiving money from a credit customer, then we put the account name, account number of that credit customer in this column. And the same thing, if we are paying a credit supplier, then we put the account number for that supplier in this folio column when we pay them. But remember, in question 4.8, we are a cash business only. We only receive cash and we pay cash for everything. We don't have any accounts of any kind whatsoever. So in the cash book payments, we also have then the next column, being the main column of this subsidiary journey, is also bank, because this is cash book payments. But have a look at the bottom over here. In the cash book payments, the bank column is getting a credit, and all the other columns will be the debit side of the journal entry. So bank gets a credit, and input VAT and trading inventory get the debit. Bank gets the credit, and petty cash gets the debit. Bank gets the credit, equipment gets the credit. Sorry, other way around. Bank gets the credit, equipment gets the debit. Bank gets the credit, entertainment gets the debit. Okay. So again, we are creating a big journal entry all on this page for the month of May for all of the payments that we made. So again, they are always entered in date order going through the month. Name of payee, who did we pay the money to? Bank is going to be, again, the total including VAT amount that we paid to the person or the business. Then we have to calculate how much just the VAT on its own is, because remember, we then have to take the VAT out of that amount, and then all of these other columns here will be excluding VAT. This amount here is excluding VAT. Okay. So here, for instance, we bought trading inventory from one of our suppliers, Lordum Dealers. The total invoice amount that we had to pay to our supplier was 34,100 Rand. We then calculate the VAT, which is 444,783. And because this is input VAT, we are going to claim that back from the receiver. And we are only going to record as an expense the excluding VAT amount. So we have to pay to the supplier the full including VAT amount. We've got to pay that whole amount, but the receiver is actually going to pay us this VAT amount back So in our business, our actual end of the day expense is only 29,652.17. Okay. So again, where all the transactions that include VAT, we put it in the VAT column so that at the end of the month, we've got the total amount of input VAT that we'll be claiming back from the receiver. And again, in the input VAT general ledger account, at the end of the month, we will only see one debit in that account for 5,672.50 with CBP1 or CBP as the folio reference in the input VAT account. And in the details for that general ledger account, we will say sundry payments for the month of May. So again, in the input VAT general ledger account, we don't have all these transactions muddling up that account and making it look messy. We come into this one cash book payments where we can see all the details, and in our general ledger, it's only this these summarized amounts that then appear in the actual general ledger itself. So in this way, remember your the bookkeeping cycle. In this way, we then follow those steps in our bookkeeping cycle to keep our accounts understandable, readable, and easy to see exactly what happened. So in the cash book payments, the trickier thing I think here is maybe the sundry accounts, because we tend to have more entries in the sundry accounts column in the cash book payments than we do in the cash book receipts. Because you see in the cash book receipts, there's very little that we will receive in our cash books that's not related to sales. So in here, the bank, we've got a loan from the bank, the owner paid extra capital into the business and we received some interest from the bank. So very few transactions you'll find in the sundry accounts column for receipts. But where it comes to payments, you will probably have many more. So remember the reason that we have these columns, the main columns, a column that we will have lots of transactions in throughout the month, we give it its own column. So the most common transaction we will have for cash book payments is the purchase of trading inventory from suppliers. So we've got a trading inventory column because here we've got more than one entry that goes into that column throughout the month. But for all of these others, I only paid some money into my petty cash box once in the month. I only bought equipment once. I only made one donation. And I incurred one expense for entertainment. Wages and salaries are only recorded once, etc. So we don't have a full column for petty cash, equipment, donations, entertainment, because we would have, if we did that, we'd have a column with only one entry in it, and our cash book payments would go all the way across the page, and we would never have enough space. So this is almost like turning the column on its side and putting the column heading under the details, and then the amount goes here under the amount column in sundry accounts. And then what is this folio? What is this amount that this, or should I say reference, that goes into the folio column here under sundry accounts? If you look at the bottom of these columns, we've got a folio. This is also a folio. Bank is account number B4 in my general ledger. Input VAT is account number B7 in my general ledger. Trading inventory, account B6. So when we are using sundry accounts, in this folio column, I put the name of the general ledger account in the details, the number of that general ledger account in the folio, and the amount that must get debited to that account in the amount column. Remember that that's excluding VAT, excepting where excuse me, where there is either no VAT, for instance, in donations, or I'm not allowed to claim the VAT back, like here in entertainment. So entertainment is a non-allowable expense, so the total amount that I paid to Buchle's Diner is the total amount that must be expensed to the general ledger expense account called entertainment. When I'm making a donation to a charity, there is no VAT in that transaction either. Wages and salaries is not a supply of goods or services, so there's no VAT in wages or salaries. And all of these others had VAT included. Postage and stationery, rates and taxes, rent expense, and bank charges. So this is one that the students get muddled up with, because bank charges comes from the bank statement, but bank interest also comes from the bank statement. There's no VAT when we either receive or pay interest, because interest is a VAT exempt item. So we will find interest on our bank statement, but because interest is VAT exempt, there's nothing that goes in the VAT column. That's $17.50, there's no VAT included in that amount. When I record bank charges from my bank statement, bank charges is a service that the bank is providing to me. So the bank does add VAT to that bank charges that they are charging us. So bank charges does have VAT included in the total amount of the bank charges. Okay, so just remember that. Postage and stationery is a normal business expense, so we're allowed to claim that. And on the rates and taxes, I don't have that details. Let me just have a look here. Springs, that's on the 30th. Let's see if I can find this transaction quickly. If you look in your textbooks, the transaction on the 30th, it's under the list of check, counterfoils, EFTs, and bank statement debits. The 30th says Springs Metro Council EFT. We paid the monthly rates and taxes, and the rates portion included in this 941.23 was 425 Rand 89 cents. So in this 874.01, the 425 Rand and 89 cents of the rates part of that account does not include any VAT. Remember also, rates is already a tax, so we don't add VAT, which is a tax. We don't add a tax to a tax. So rates is also exempt from VAT. So only that part of the rest of the account, excluding the 425.89, includes VAT, which will be for the services that the municipality provided us, which is water and electricity and refuse removal. Okay, so what you would do here is you would take 941.23, you would subtract from that your 425.89, and that amount that is left would then be the amount that includes VAT. And you would then calculate multiplied by 15 over 115 of the remaining amount to get the 67.22. And then you would take the excluding VAT amount from that plus the rates amount of 425.89, and that would add up to your 874.01. So always just remember, be careful when you get a municipality account. The rates portion of a municipal account will not have any VAT included, but the water, electricity, and refuse removal does have VAT included in it. Those are usually the most important things to look out for in a cash book payments question. Okay. Name of payee, who did you pay the money to? And in the details column is the name of the general ledger account that you must debit. because you paid. So in other words, from Lucia's Utensils, which is the company we bought the equipment from. So the name of the company goes here, and the general ledger expense account or asset account goes here. Okay, and your VAT calculations are the same. 15 over 115 multiplied by the inclusive amount will give you the VAT, and you subtract those two and you'll get the excluding VAT amount. And then in this question as well, they had the petty cash journal, a similar structure to the other cash books. Document day details amount. So here our amount is petty cash instead of bank. Main column. So we are going to credit the petty cash column because we will be taking money out of our petty cash box when we purchase whatever these goods are. So this is where the petty cash journal is different to the cash book payments. In the details column of the petty cash journal, we do write down what we purchased. Not who did we pay the money to, but what did we purchase. Postage stamps, fuel, tea and coffee, reams of paper, fuel, I paid wages. And in this one here, we do write the who we paid the money to, because in the sundry accounts column, we write their trading inventory, which is what did we purchase. And again, the columns that go here will be those columns that I use frequently. And then any transaction that I don't use frequently, we put under the sundry accounts column. And again, the details in this column is the name of the general ledger account that must get the debit for this amount of money. Okay, so this first details column, what did I purchase? Your sundry accounts details column in all of your subsidiary journals is always the name of the general ledger account that must get the debit in the case of your petty cash and cash book payments, and the name of the account that must get the credit in the case of your cash book receipts. Okay. Again, petty cash will be, this is your including VAT amount, and these will all be excluding VAT. This will be excluding VAT. Now, I don't know why they put the VAT amount over here on the, usually the VAT column is the very first column appearing after our main column, so that we can take our including VAT amount of the transaction, take the VAT out of that amount, and then these amounts here will all be excluding VAT. Okay, so you can see from this that once you get into the rhythm of how these subsidiary journals work and what belongs in each column and how these transactions work. So here again, petty cash, we are creating one journal entry that we will post at the end of the month of May, where we will credit petty cash 173822, and I will debit postage and stationery 119, staff refreshment 71, input VAT 81, and then each of these accounts will also be debited individually using the sundry accounts column as my source for posting to the general ledger. Okay. So that's why in this in these solutions at the bottom of the sundry accounts column, they have made the note debit the individual accounts, meaning debit drawings, debit fuel, debit wages, debit trading inventory. Whereas these columns here, the total of the column you will debit to N7, which is postage and stationery. The total of the column you'll debit to N12, which is staff refreshments. And again, this reference in the folio column is the general ledger account number for drawings. There you'll see B2 drawings, B2 drawings. They don't always give you this folio in a question, in an assignment or an exam, but sometimes they do, and if they do and they ask you to complete that column, then you must put that, that reference in. Always also remember to take note of, do they want you to record the document? Sometimes, again, they don't give you document numbers and you don't have to include them. But if they've given you document numbers, again, use the correct documents with the correct dates, etc. And it's also very important that you guys get used to and practicing with these questions where they give you a whole page full of transactions, that you can sort through those different transactions and identify which transaction belongs in my cash book payments, which one goes in the petty cash, which one goes in my cash book receipts. Because that's also quite a common mistake. Sometimes students put the incorrect transaction into the incorrect journal. And then, of course, your totals are not going to be correct. And your control accounts, your petty cash and your bank account are not going to be correct either if you've muddled up the incorrect transactions. So always double check yourself that you have put the correct transactions into the correct journal before you carry on. So remember, I've been talking all this time about the general ledger and the T accounts. So once we have completed our subsidiary journals and we are happy that they are correct, the next step in the bookkeeping cycle is to post these column totals and these sundry account amounts into our general ledger. So here you can see we've got the capital T account, and remember we call it a T account because it's in the shape of a T. And if we are going to debit a T account, we would fill in the columns on the left-hand side, and if this account must get a credit, we must fill in the columns on the right-hand side. So from our cash book receipts, the owner paid money into the business's bank account. So the owner's capital, the bank got the debit. Here, the bank got the debit and the capital account got the credit. So in our general ledger accounts, these columns again is date, details, folio, amount. Always the same, whether it's on the left-hand side or the right-hand side. The date is self-explanatory, that this is the date that that transaction took place. In the general ledger T accounts, what belongs in the details column is the name of the general ledger account that got the debit. Here I am crediting the capital account with 55,000 Rand. So I make a note in this column which account got the debit, so that when I'm looking at my general ledger, I can see what both sides of my double entry were. Credit capital, debit bank. And remember, that is called the contra account. So the name of the contra account is what we write in the bank. What we write in the details column. The students often put the weirdest information in this details column. That's all it is. Name of the general ledger account that got the debit. Because here I'm crediting this account, so where did the opposite side of the entry go? So drawings is an expense account. So we debit the expense account, and again, look at the details column. The owner took money out of petty cash, or we used petty cash to pay for items that was for the owner's personal use. So drawings is getting a debit for 220 and a debit for 25 Rand, And in both instances, the account that got the credit was petty cash. Here again, from the cash book receipts, the loan account. So we put the loan into the bank, so the bank account got the debit and the loan account is getting the credit. Here's our bank account. Very important account to always make sure you know what are the entries that go into this account. So in our cash book receipts and our cash book payments, we had all the details for all the transactions that took place throughout the month. And only the total column of that bank column gets written into the bank general ledger account. So for our cash book receipts, the total of the bank column, because we put in money into the bank and bank is an asset, it increases on the debit side. So when we receive money, we debit the bank account. And in this case, because the contra account was many different accounts, we just write total receipts. And when we see that the folio is the cash book receipts, we immediately know that this is the column total from the cash book receipts, which means that the credits went to many different accounts. And here on the right-hand side is the posting of the bank column total for the cash book payments. So again, because the debits went to many different asset or expense accounts, we only write total payments under details, but the bank column from cash book payments, we write the total amount in there. So you can see how using those subsidiary cash book receipts and cash book payments for all the transactions makes our bank account in the general ledger nice and neat, because we've only got total receipts on the left-hand side, total payments on the right-hand side. So if we had an opening balance, which we don't in this case, but usually on the left-hand side here, you would have the opening balance in your bank account, plus your receipts for the month minus the payments for the month, will then give you the balance, opening balance brought down for the first of the following month. So please make sure that this account, bank account, is a very, very NB account, that you understand this and you know what all of those entries are that go into this account, because you are very often asked to complete a bank account in questions. Okay, and then please go through the solution in your textbooks. You've got all this information. You can then follow all of these other general ledger accounts, and you can see where these amounts came from, either the cash book payments, in this case the petty cash journal. Your sales account is obviously your cash book receipts, and follow the process from your bookkeeping cycle all the way through. In this question, after we've posted everything to the general ledger, the next step in the bookkeeping cycle is then to draw up a trial balance, which, remember, is to go through all our general ledger accounts in order and write down what the closing balance in that general ledger account was. Any owner's equity accounts or liabilities will be on the credit side, and any assets will be on the debit side for the balance sheet section of the account, statement of financial position section. And then the nominal account section, which is all of our income and expense accounts. All the expenses will be on the debit side, and all of our incomes will be on the credit side. And always your trial balance total debits must equal the total credits, and then you know that you did your double entry recording of each individual transaction correctly, where your debits always equaled your credits and your accounting equation was always in balance. And I just wanted to show you quickly before we finish off at the end of this question, which isn't, strangely enough, a section in the question, this number 9 and 10, but they've included it in the solutions, which is the analysis of all of these transactions under the accounting equation. So you are often asked to complete this. So come to this question 4.8 and revise this for the transactions, because here, for all of the transactions from the cash book receipts, they have broken them down in this format, accounting equation format, assets equals owner's equity plus liabilities. Which account got the debit? Which account got the credit? Was that amount increasing or was it decreasing? So you can practice. And they've done this for you for the cash book receipts and also for the cash book payments as well, and your petty cash. So this is a really, really good question to come and practice to make sure that, and I'm talking about practice now because we are thinking about the exams. They're around the corner. We're in week 13 now, and we're getting ready for our exams in June. So if I was you, I would definitely use this question 4.8 for revision to test myself. What do I understand? What don't I understand? You'll see they've made lots of notes in your solutions. They put lots of notes and explanations for why we did things, what the calculations for those amounts were. So use your solutions also as, why did I get so far away from that question? Use your solutions also as a tutorial to help you understand all of these transactions. Okay, guys. I hope this has helped you. Again, I'm just trying to do as much general revision as I can in these sessions to really help you to understand what goes on in these journals, which is what you guys are spending most of your time doing in this accounting introduction to accounting. And that if you've got any questions at all, you can let me know what they are. Okay, anybody got any questions to finish off? Otherwise, I'll stop the recording and post this for you. And remember, if this has generated any question at all, please let me have the questions so that I can assist you as we go along in preparation for the exams. No questions? All right, guys, then I'm going to end off the recording.